Hello guys, welcome once again to my YouTube channel. This is Oba FX Trading Academy. It's another trading weekend and today we're going to be looking at a Deriv synthetic index as we normally do because the currency market is currently on break, and today I'm going to be looking at Crash 500 index. So as you all know, I like doing top-down analysis of different financial assets, and I like starting my analysis from the monthly time frame using pure price action trading strategy. So without further ado, let's get to it. Now, currently on the monthly time frame, and from this time frame, we can see that the market has been in a downtrend for a very long time. So how do I mean? You can see here that the market made a lower low, lower high, lower low, lower high, lower low, lower high, made a lower low, lower high, a lower low. And currently, if I'm to take these two, since the first day of August, the market has been trying to make a retracement, which is also evident by this big green candle that we're seeing here. So the question that we would like to ask is, where is this where will price likely retrace to? So even though the market has been in a downtrend for a very long time, this green candle, remember each candle here represents 1 month. This big green candle shows that since the 1st of August, this is currently the 16th day of August, that the buyers have been trying to push price upwards, which makes sense because the market would need to retrace in order to decide whether it will continue in its current bearish direction. So where would this price likely retrace to? So I would say price will likely retrace to this zone, or if I'm to include a Fibonacci retracement tool, I'll say price will likely to retrace to either of those zones. So the place I'll be predicting price to move back to before probably continuing downwards would be either the Fibonacci retracement golden zone. For those of you that have been following me, you know I like using three basic tools: the support and resistance, trend line, and Fibonacci retracement golden zone. So I can as well include my trend line here. But as we all know, this is the monthly time frame. So my directional bias from those monthly time frame is that price is making a retracement upwards, and there are two major areas that price would likely retrace to. The first would be this support, this resistance zone, and the second would be this Fibonacci retracement zone. So if the market makers decide to use this as a liquidity grab, that means when price gets here, it's likely to come up here and even make a third touch of this trend line before continuing downwards. Now, the best place for that I'll be looking to sell, if I'm to sell, catch sell trades will be this Fibonacci retracement golden zone. So, however, this is the monthly time frame, and all we try to do from this monthly time frame is to get our directional bias, and from here we already know that okay, price is making a retracement and we have a potential destination where we feel price is retracing to. So now let's go to the weekly time frame to get clearer pictures of what the market is doing. Wow, okay, now from the weekly time frame we can see that, okay, just like we said before, the market is in a downtrend. But if we take a closer look, so if I'm to zoom out, if we take a closer look and see that the market made a low, lower low, lower high, lower low, lower high, lower low, double top, then made a lower low, lower high, lower low. And I would like us to pay attention to what's happening here currently. So we said the market is trying to move upward. So let's go to the line chart to see the structure that we have here as a result of this retracement currently happening. And now we can see that we have a W pattern. Now I explained in a previous video how to trade W pattern. So I say when you have something like this, and I said that the W pattern is a bullish reversal pattern. In other words, when price is going downwards, when this pattern shows up, it is giving us a signal that price wants to move in the upwards direction. And so just as we're able to deduce from the monthly time frame that the price is making a retracement, it is no surprise that we're having a W pattern at this time on the weekly time frame. So I said earlier, I had stated in an earlier video that, or explained in an earlier video, that when you want to trade this pattern, all you have to do is wait for map out the neckline and wait for price to make a retracement into this neckline, and that price would even likely break the trend line to come downwards, and then we can start looking for, immediately price gets to this neckline, we can start looking for a change of trend or a change of structure to take our buy trades. So bearing this in mind, let's now look at this particular pattern. So I can as well map out this neckline and then go back to the candlestick chart to see if we have anything. So this is the neckline mapped out properly. You can see that price had retraced back into this neckline and it's currently being rejected from the neckline. So we can as well add our internal trend line, and we can see that the internal trend line has just been broken. So if I were to look at the structure again, we say that we have a lower low, lower high, lower low, lower high, lower low, lower high, lower low. So the most recent lower high had just been taken out. So everything we have here on this weekly time frame is indicating to us that the market is doing everything it can to go upwards. And this supports our initial take from the monthly time frame that the market is headed towards this destination first, and then maybe probably break through the zone and get to make a test touch of this monthly trend line and the monthly Fibonacci retracement golden zone. So having this in mind, we can now know that, okay, we're looking for buy trades into this zone or into this zone. So to get a much more clearer picture, let's now go to the daily time frame. Okay, now in order to make our chart less busy, we can take out some of these tools that will not be needing immediately. So I can take out this monthly Fibonacci retracement tool, but I'll leave the zone because the zone is still important. But the immediate things we'll be working with, make an adjustment of this trend line. The immediate things we'll be working with will be what we have before. So if I'm to zoom in again, we can see that the structure of the market now is becoming much more clearer. So we have like a lower high, a lower low, lower high, lower low, and this is the lower high that has just been taken out. The retracement was made slightly into the neckline of the W pattern that we saw. Remember, this will now be the W pattern, down, up, down, up. So retracement is being made into this particular pattern. So the question will now be, well, on the daily time frame, so how do we now approach this particular market? So zooming out again, I can now also add my regular tool. So because this particular trend line, if I'm to zoom in, this particular trend line has already served its purpose by helping us know that, okay, the trend line has been broken, the lower high has been taken out, the market is making a retracement backwards into this neckline. Initially, it was rejected from the neckline. So I can now zoom in and work with what I have, the most recent happening in the market on this daily time frame. So the next best thing I can do would be to add my trend line again on the daily time frame. And after adding my trend line, we have a support zone from where price has been rejected from. So this gives like what a swing high. So what can I also do next? I can now add my Fib tool again. Remember, I said I work mainly with three basic tools: trend line, Fibonacci retracement tool, and support or resistance zone. And then from what we can see that price is already at this key zone, which is what the Fibonacci retracement to key zone. So the question would now be, what do we do next? We're hoping that price is going to rise into this place. We're hoping that price will leave here. This is our destination here into this place. This is the daily time frame. So if we're able to catch any buy trade here, coming into this place is going to give us massive profits. But we just can't jump in because price is in our key zone. The next thing to do would be to go to the next lower time frame, which is the H4 time frame. Now we can see that the structure is a bit clearer. Now we can see that the market has been respecting this trend line. The market is currently at our Fibonacci retracement to golden zone, which is the zone between the 50% and 61.8%. Do we now also just say because we're on the H4 time frame, we should just jump and take our buy trade? The answer is no. Now, all we now need to do is to look at our different entry model. First of all, the first thing I'll do here would be to put a counter trend line. Counter trend line is a trend line in the opposite direction of your initial direction. While on those H4 time frame, the market has been making a series of higher highs and higher lows, which means the market has been bearish. So our counter trend line has been bullish. So our counter trend line will be bearish. So the first indication, or the first thing that will encourage me to jump into this trade, to take a buy trade, would be if this trend line is broken, and I'll probably wait for a retest and then I can take my buy trades. Now, to even make this a bit clearer, another thing would be if I can spot like a bullish reversal chart pattern within this zone, then I can jump in, maybe like a double bottom, a double bottom, and inverse head and shoulder pattern. Then I can do the needful and jump in. Then also, if I can spot like a candlestick, very bullish candlestick reversal pattern, bullish candlestick reversal pattern, like like the bullish engulfing candle, like a bullish engulfing candle here, or like the morning star, then I can jump in to take my trade. Now, for me to see these patterns clearly or clearer, I can come here, come to the H1 to check for it. So we can see that even on the H1 time frame, the reason we can't take our buy trades now is because we can see the market is still making lower low, lower high, lower low, lower high, lower low, lower high. So if we can get a situation whereby this lower high is taken out, so if the if the bulls are able to do this, take out this lower high, come back, and then price comes back to make a retest, then we can confidently take our buy trades, and then our stop loss will be beneath this area. So this is why patience is usually a very, very strong virtue when it comes to trading. Now, somebody will say, hey, it's in our key zone, I can just decide to be aggressive and I'll take my trade. Yes, you can do that if you have a very, very large account size, and probably, but then your stop loss would now be very, very high, because if you are to take your buy trades here, to be safe, you have to place your stop losses here. That's if you do not if you are not patient enough to wait for a change of trend or a change of the market structure. But it is usually best to do that to be safe. So just like I explained, if this trend line breaks, there's a retest, or if this initial lower high is taken out and there's a retest, then you can take your buy trades. The reason I'm saying this is the market has a liberty to keep making these lower lows until it gets to this point, in the market, because until this particular zone is taken out and retested, the market remains in an uptrend. So this is my outlook for the market. We said that the market for a long time has been in a downtrend, but currently is making a retracement, and we said that it is retracing to the market is making a retracement, and we said that it is retracing to this zone. And just to support our bias, we see that on the H4 time frame and from the daily time frame, the market is already making higher highs and higher lows. So the market is currently at a key zone. All we need to do is to wait patiently for our entry model and take our buy trades. So this is my bias for the crash 500 index, Deriv synthetic index. And if you're into trading Deriv synthetic indices, you come across this video, you can compare this analysis with yours and watch the market closely to take your buy opportunities as they play out. If you are coming across this channel for the first time and you like what you've just listened to or what you've just watched, I would like to plead that you hit on the subscribe button for subsequent videos. Also, we do account management and we take mentorship programs because it's a trading academy. If you're starting out your journey and you want to make your journey quicker and easier, or you've been trading and you want to improve your strategy, or you want to learn how to do this analysis just the way I have done it from scratch, then you can always reach out to me via the contact details on my YouTube bio. Thanks to all that have been supporting this channel from day one. I really super appreciate. And thank you, thank you, thank you. Enjoy the rest of your weekend. Cheers.